It's pretty simple. So you want to, anybody who's looking for health insurance, you have two, if you're going through the healthcare system, right, the federal healthcare system in your state, they're going to require a couple of things. You're either a 1099 employee or you're a W-2 employee. So understanding that probably most individuals or people listening to your
But
podcast are
what
going to
if
be
you're unemployed?
unemployed.
How does it work?
Unemployed is going to be tough. Unemployed is going to be tough. You're going on Medicaid. So you're
Okay.
going on what's called Medicaid, which is provided by every state. Again, a federal program managed and administered by each individual state that helps people who are disabled, low income, unemployed individuals, and so that's going to provide those individuals and those people with some care. If you are employed and you're making a living or some type of wage, then you want to go into the federal health system. And so the process is super simple. You're basically simple questions: your name, address, how many people are in the household, how much income you're making as a household, not just that one person, but if you're married, both you and your spouse. And so if you're utilizing the federal system, they're going to check, right? So if you say, okay, in my household, it's me and my wife, and we have 2 children, and we claim $80,000 a year in income, okay, great. That's what you're going to put on the application. The system will automatically tell you what you qualify for based on that income. And they'll give you that subsidy, that tax credit that goes towards paying your health insurance every month. If there's a balance, then you are responsible for it.
Okay, let's say, like you were saying earlier, let's say $700, and that you have to pay the whatever is extra.
Correct. So let's say, for example, a family of 4, like that same example, making $80,000 a year here in Florida, it's likely that their insurance would cost somewhere around $800 to $1,200 a month. Now, the state, based on that person's income, that household, they might give them $500, $600, $700 per month to cover that. That goes directly to the insurance carrier, and the difference would be paid by that family. So that policy now doesn't run $1,000 or $1,200. Maybe it's going to cost $400, $300. And so there's.
But that doesn't have nothing to do with deductible.
Nope, that's your monthly cost of insurance. Correct.
There's no deductible in that.
So that's where you get complicated, right? Because some policies have deductibles of 0, no deductibles. Some policies can go up to $10,000, $12,000. So it's important that when you're talking to an agent, right, that you're getting qualified. So how do I choose a $10,000 deductible or a 0 deductible? Well, there's a couple of factors, right? One, affordability tends to be probably your number one thing that people are going to look at, right? How is it going to affect my pocket? What do I need to pay every month to have this insurance? And so that's number one. Number two is our health profile, right? So I think we talked about this a little bit before, but if you're a younger individual, right? You're under 40, you have no health issues, you don't have high cholesterols, you don't have any of those things, you go to the doctor once a year to get checkups and that's it, then your health profile tells you that perhaps you can take a higher deductible in these younger years because you're less likely to use it and have to come up with that deductible money. And so you're balancing out. Essentially, your deductible determines your monthly payment. That's the number one driver of what you pay every month, is how low or how high that deductible goes.